Hey, Vancouver and BC homebuyers. Tim Hill here, your trusted mortgage broker who's seen this market swing from boom to bust and back. And right now, it's buyer's paradise time. As of late September 2025, home prices across BC are dipping. We're talking 2 to 4% drops year over year in Greater Vancouver, while the Bank of Canada just slashed rates to 2.5%. If you're a first-time buyer, upsizer, or investor, eyeing that Fraser Valley gem, this combo could supercharge your mortgage game like never before. Today we're unpacking how falling home prices in BC affect your 2025 mortgage buyer opportunities. We'll cover the general principles, dive into current housing trends, break down interest rate shifts, and show exactly how this juices your affordability. Plus, my projections to 2026 and pro strategies to pounce. This 15-minute breakdown could land you thousands in savings. Or that dream home you've been scrolling Zolo for. New here? Hit subscribe and the bell for weekly Vancouver-specific hacks. Let's roll. First, the general principles. When home prices fall and rates drop, it's like the stars aligning for buyers. Principle 1. Affordability skyrockets. Lower prices mean less principal to borrow, so even at the same rate, your monthly payment shrinks. Stack on falling rates, your interest costs plummet too. In economics lingo, this boosts your debt service ratios, making it easier to qualify under Canada's stress test, which is the current rate plus 2%. Principle 2. Inventory builds. Sellers hold off in a dip, but motivated ones, like relocators and downsizers, flood the market, giving you negotiation power. Think 5 to 10% off asking in hotspots like Surrey. Principle 3. Timing matters. BC's market is cyclical. Post-hike corrections like 2022 to 2024 create entry points before rebounds. For Vancouverites, where the benchmark's still over $1.2 million, this dip offsets our insane costs. Think property transfer tax and strata fees. But act fast. Low rates could flip this to sellers' favor by spring 2026. As a broker, I've prepped over 20 clients this month alone. More on that soon. Now, let's zoom into BC housing trends as of September 2025. The data's clear. Prices are softening, creating real buyer breathing room. In Greater Vancouver, the average home price hit $1,226,351 in August, down 1.9% year over year and 1.3% month over month. Vancouver proper, average sales at $1,150,400, a 3.8% year over year slide. Provincially, BC's residential average dropped over 4% year over year, per recent RE Max Insights. Why the fall? High inventory. Listings up 15 to 20% in the Fraser Valley and Vancouver meet sluggish sales amid 6.2% unemployment and tech layoffs. Condos are hit hardest, down 3 to 5% in benchmarks, while detached holds steadier around 2 million, but with more concessions. Victoria bucks the trend slightly, up 1.6% to 1.3 million. But overall, it's buyer-friendly. Sales ticked up just 1.1% nationally month over month. But Vancouver's seeing fragile recovery with more multiple offer scraps easing. From my desk, inquiries are surging 25%. Folks who waited out the hikes are back, haggling on that Olympic Village 2-bed. Bottom line, this dips your discount code for 2025 entry. So, what's fueling this opportunity? Well, it's interest rate trends that are all downhill. The Bank of Canada cut the overnight target to 2.5% on September 17th, their first cut since March, matching the Fed's move south. Prime rates followed to 4.7%, passing savings straight to variables. Why? Inflation's glued to 2%, jobs are softening, and growth is sputtering, so the Bank of Canada is restarting the easing cycle. Forecasts for the rest of 2025? The consensus from TD Economics and Deloitte calls for 2 more 25 basis point cuts this fall, landing at 2.25% by December. Mortgage-wise, 5-year fixeds could dip to 3.75 to 4.2% by year-end, and variables to 3.5%. Looking into 2026, a gentle rebound is expected. Policy rate to 2.5 to 2.75% by mid-year as recovery kicks in, with trading economics models projecting a 2% long-term neutral. Bond markets agree. No wild hikes unless trade tariffs spike. For BC buyers, this means borrowing power is up by 10 to 15%. So that $600,000 pre-approval last spring, now it's $700,000. Easy. I've even locked in rates under 3.7% this week. Total game changer. So, how does this duo, falling prices and low rates, turbocharge your 2025 mortgage? Let's math it out. Say you're eyeing a $1.2 million Vancouver benchmark home, down from $1.25 million last year. At 20% down, that's $240,000, so you're borrowing $960,000. Pre-dip, at 5% fixed over 25 years, that's $5,650 monthly. Now with prices off 3% and rates at 3.75%, borrowing drops to $926,000, and your payment falls to $4,850. That's an $800 a month win, or $9,600 a year. For variables, it's even sweeter at 3.5%, with another $200 a month shaved off if cuts continue. And the stress test? It drops from a 7% qualifier to 4.75%. Suddenly, dual incomes qualify for 20% more home. Renewers, if you're rolling over a high-rate mortgage, refinance now to capture the dip. Penalties are low, and equity's building. In BC, where affordability is brutal and homes eat up over 50% of income, this really resets the clock. More room for HELOCs on renos or suite builds, especially with the rental crunch. Real client story. A Kitsilano couple saved $15,000 a year buying 5% below ask just last week. Pure opportunity. Buyer opportunities? Honestly, they're endless, but you've got to be strategic. First, hunt motivated sellers, folks relocating from the Calgary influx or empty nesters. Offer 3 to 5% under with a quick close for some real wins. Second, layer incentives. Think seller paid, closing costs, or rate buydowns through your lender. Third, target condos and townhomes. They're dipping fastest and could yield 4 to 6% ROI potential in rebounds. Fourth, pre-approve aggressively. With rates falling, lock in a rate hold for 90 to 120 days to shop without pressure. In Vancouver's pockets, like East Van or Burnaby, expect 5 to 10% further softening in Q4 2025 before things stabilize. Beyond that, if rates hold low, prices could firm up by 2 to 3% in 2026. So, buy now. Build equity. Risk? US election tariffs could prolong the dip, giving you an extended window. My advice: stress test your budget with a broker. It's free, and honestly, no BS. And that's how falling BC prices and rates are rewriting your 2025 mortgage story, from squeeze to seize. General principles say buy low, but the trends are pretty much screaming now. Got questions or comments? Want to know the best neighborhoods for deals? Or how's North Van faring? Hit like if you're house hunting, subscribe for more, and link up for your free consult. We'll crunch your numbers with the latest data. Thanks for tuning in. Here's to snagging that Vancouver dream home. Catch you next time.